Welcome to AM Best Audio.
While the U.S. life annuity insurance industry remains financially healthy, it's experiencing a decline in the quality of its capital driven by insurers' utilization of soft capital, offshore, and affiliated reinsurance approaches, according to a new AM Best report. We're joined today by one of the contributing authors to the annual Review and Preview Best Market Segment Report on the life annuity industry, Associate Director Kate Steffanelli. Kate, welcome. So great to see you. Thank you so much for joining us today.
Thank you.
Kate, what can be said about this segment's current capital and surplus levels, at least as it reflects the first 3 quarters of 2025, and has the quality tapered off?
Okay, thank you for the question. So what we're seeing is really good overall capital levels across the life and annuity segments, driven by net income growth. The level of growth does differ a bit depending on the profile of the carrier, their product focus, as well as the asset mix they choose. We're seeing some carriers lean towards alternatives and other higher risk assets as they look for yield. It was about 4% growth in capital through the first 3 quarters, and we expect this as we move forward. Our BCAR scores have been coming in favorably year over year for most segments, and life has been benefiting from a normalization of claims coming out of the pandemic. The group annuity carriers, however, saw a slight decline due to strain from a continued strong consumer demand and strong sales. Surplus has been expected to remain adequate as we end the year and looking forward. And you asked about quality, and we're seeing some impact to quality of capital with balance sheets as we see an uptick with reinsurance and offshore cessions, really overtaking onshore in recent years. And when we have offshore, we spend time looking at assets and having those kind of conversations. The level of transparency has been improving though. And we look for companies to have appropriate ERM in place when they enter into these contracts.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Private credit appears to be garnering a larger role in investment portfolios. Kate, what's driving that development, and is there a downside risk involved here?
Yeah, so we've seen an increased allocation to private credit in the industry in recent years. So I would say it's given us some concern with potential for higher defaults, deterioration of credit quality as we move forward. Certain segments of the industry have more concentrated investment strategies, riskier assets that they're using to achieve higher yields and more profitable spreads. And we think we'll see this continue to expand. We're also seeing more mid-sized carriers that are looking at outsourcing investment management than we have seen in the past. We're seeing a mainstreaming of less liquid private credit in portfolios when it was not something they looked to in the past. Allocations seem to be shifting to a mix of ABS, direct lending, asset-backed financing, and other affiliated structures. And all that is increasing exposure within portfolios. The risk is really in concentration and lack of expertise in managing the assets.
Reinsurance has become more of a discussion point for the life annuity segment than in the past. Kate, what roles are affiliated and offshore reinsurance playing in this area?
Yeah, so as I mentioned before, we're seeing an uptick in reinsurance as a whole, but affiliated and offshore cessions have really been elevated in recent years. And the industry's average leverage has increased materially over the last 5-year period. The structures are helping companies to move risk and for offshore entities to take advantage of certain differences in capital requirements. At the end of the day, if it's affiliated though, the risk is still within the same organization, so we're capturing it in our analysis. Regardless of whether it's affiliated or not, AM Best does a good job of looking at the organization holistically and bringing all the risks into its capital model and building into our overall balance sheet analysis.
Kate, what is AM Best outlook on this segment, at least for the balance of 2026?
So for 2026, we expect the segment to report favorable sales and operating performance with adequate capitalization and stable earnings. We think we'll see continued demand for both protection and accumulation products in line with the growing demographics. We should see continued premium growth and increased competition, and companies continue to focus on diversity and growing their fee-based business as well. With increased balance sheet risks and potential pressures around the US economy and geopolitical risks, there's always a need for continued evolution and strengthening of risk management practices. And in order to remain relevant and compete, carriers will need to be focused on technology and innovation as part of their strategies.
Kate, always a pleasure. So great to see you. Thank you so much for taking the time to speak with us. Greatly appreciate it.
Thank you.
That was Kate Steffanelli, an associate director at AM Best. You can view the full report online at ambest.com. For AM Best TV, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.